Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Caleb Silver. He's the editor-in-chief with our friends over at Investopedia, and we're here to talk about investing in the Nasdaq 100 index. Caleb, it's great to have you with us. As always, before we get into the NDX, let's learn how an index fund works.
Okay. Index funds are basically baskets of stocks, equities, or securities that track sectors or markets. So like a mutual fund, an index fund might track the S&P 500, might track the Nasdaq like we're about to talk about. So there's a way of accessing the market without actually buying the whole market. You can buy an index fund which basically mirrors the performance but in individual securities all basketed together.
Have we seen growth because of the active versus passive debate? It seems as if a lot more flows are going into passive management.
Yeah, I mean, active management is still a $20 trillion industry. Passive with ETFs is about a $4 trillion industry, but index funds, whether they're mutual funds or ETFs, is growing, and a lot more people are getting into it. You find younger generations more attracted to passive investing than older generations that are used to active management, used to sitting with their advisor, used to sitting with somebody who helps them with portfolio construction, and they want that active management usually through mutual funds. Younger generations, because of technology, because of the fact that they realize they might not be able to beat the market, are more attracted to index funds and ETFs.
All right, well, it's interesting you bring up technology because 50% of the Nasdaq 100 is technology companies, along with biotech and other sectors, but it brings together the most innovative and diverse global companies.
Right, and a lot of those companies are listed right here at the Nasdaq. What it doesn't have is the financial companies and financial services companies. They don't live in the Nasdaq 100. You do find the biggest tech companies and the most innovative and some of the newer ones as well, but you do have legacy companies like a Microsoft in there, and it is what we call cap weighted, though slightly adjusted in that the biggest companies have the most weight inside the index. So when you see the Nasdaq 100 moving, sometimes it's because of some of the biggest companies in there are having some of the biggest moves.
Let's say one exposure to this, and I might not be familiar with indexing funds and investments, and we can get into that down the line when you're back with me, but the Invesco QQQ ETF, you can get that same exposure, but with something that might be more recognizable via an ETF.
Right. The QQQ, it's issued by Invesco, is the access point for the Nasdaq 100 if you're going to buy an ETF. If you want to track the Nasdaq 100, it's the Qs. And the Qs is one of the biggest ETFs out there. It's also been around for quite a while. It's attracted a lot of investor attention. It's the right way if you're looking to access it in an affordable way to access the 100 right through that ETF. But there's other ones that do it as well. The Qs is definitely the biggest.
All right, Caleb, thank you so much as always for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.